Every time an AI agent tries to pay for something, it runs into the same wall. Credit cards. The financial system built for humans is fundamentally broken for machines. Today we are going to break down exactly why and what the alternative looks like. Here is the core problem. Credit cards require a billing address. They require KYC, know your customer documentation. An AI agent does not have a billing address. It does not have a social security number. When an agent starts making unusual API spending patterns, thousands of microtransactions, automated purchases at odd hours, fraud scoring systems flag and block it, and chargeback logic assumes a human on the other end, disputing a charge. Every single payment requires human provisioning upfront. This does not scale. So what do agents actually need? Four things that traditional finance simply does not offer. First, micropayments. An agent might need to pay $0.00001 per API call and do that millions of times per day. The economics of credit card fees make this impossible. Second, programmatic escrow, the ability to lock capital until a task is verified complete. Third, self-custody, hold money directly, without a custodian who can freeze or claw back funds. And fourth, credit and loans. An agent might need to borrow capital to take a job, then repay from the earnings. None of this exists in traditional fintech. This is where Bitcoin and the Lightning Network come in, not as speculation but as infrastructure. The key protocol is L402. It works like this. An agent sends an HTTP request. The server responds with a 402 payment required along with a Lightning invoice. The agent pays the invoice instantly with near zero fees and gets access. No account, no KYC, no custodian, just cryptographic proof of payment. And HTLCs, hash time locked contracts, enable programmatic escrow on Lightning. Funds are locked and released only when specific cryptographic conditions are met. This is exactly what agents need. But what about credit? An agent without existing capital cannot take jobs. That is where NIPAC comes in, built by OpenAgents. NIPAC introduces outcome-scoped credit envelopes. Here is the key insight: agents do not need traditional collateral. Their reputation is the collateral. And on Nostr, the open decentralized protocol, an agent's reputation is public, portable, and verifiable. Identity continuity, verified receipts, public job history. That is your credit score in the agent economy. Let us walk through how it actually works. An agent sends a credit intent to an issuer, essentially saying, I want to take this job, I need X sats of credit. The issuer evaluates the agent's Nostr reputation and responds with a credit offer. If accepted, a credit envelope is created, maximum satoshis, expiry time, job hash. The agent can only spend within that envelope on that specific job. When the work is done and verified, a settlement receipt is posted back to Nostr. The agent's reputation updates. Next time, better terms. Now, Bitcoin is not the only player here. Coinbase launched X402, a similar HTTP payment protocol, but using stablecoins and requiring a Coinbase wallet. Stripe partnered with OpenAI on ACP Agentic Commerce Protocol, but it is still tied to human-linked checkout flows. Stripe also partnered with Tempo on MPP Machine Payment Protocol, focused on machine payments but still fiat-dependent. The pattern here: all these approaches require permissioned infrastructure. Walled gardens, you need a Coinbase account, you need Stripe access, you need to be in their ecosystem. Here is something fascinating. The Bitcoin Policy Institute ran a study: 36 AI models, 9,000 simulated decisions, when reasoning from first principles about money, without being constrained by existing payment systems. Bitcoin was chosen in 79% of saving and store of value scenarios. Stablecoins were preferred for everyday transactional payments. Traditional fiat, rarely chosen. When you give AI models the freedom to think about money from scratch, they keep arriving at Bitcoin. OpenAgents is making the most comprehensive bet on this thesis. They are building three interconnected things. Psionic, a Rust-based machine learning framework designed to replace Python and PyTorch for agent workloads. The OpenAgents network, native MCP and A2A support, enabling true agent interoperability. And NIPAC, the Bitcoin native credit protocol we just walked through. This April, they are running a Bitcoin training run. Contribute GPU compute to training their models, get paid in Bitcoin. That is the full loop. Some people ask about corporate blockchains. Ethereum Enterprise Solutions. Permissioned ledgers. Here is the honest answer. A permissioned blockchain is a glorified database in a walled garden. You still need a gatekeeper. You still need someone as permission to access the network. For agents that need to operate across organizational boundaries, across jurisdictions without human supervision, you need a truly open, permissionless settlement layer. Bitcoin is the only credible candidate. Open protocol versus blockchain as product, there is a meaningful difference. This is bigger than payment rails. Stripe and Ramp are built on the assumption that every financial transaction has humans at both ends. That assumption is about to break. Agents do not need a billing relationship, they need open rails. The agentic economy will root around the middlemen. Watch for NPC adoption across agent frameworks. Watch the L402 versus X402 battle for the default agent payment protocol. Watch OpenAgents' April Bitcoin training run. It is the proof of concept. And read the full breakdown at thinksmart.life/research. This is the financial infrastructure layer of the agentic future, and it is being built right now.